Hello everyone, welcome to this new supply and demand weekly analysis for the 11th January 2021. This is the trading disclaimer. You can pause the video and read it at any time. Okay, let's start with the dollar index. As explained in previous analysis, now price is too low in the monthly range for shorts, so we cannot go short. As you can see here in the 4-hour supply, it's being eliminated already, that one as well. Now we have a 4-hour uptrend potentially. There's a new area of demand on the daily for potential longs. No shorts are allowed. We need a bigger retracement. Latest bearish impulse on the weekly did not consolidate away. These lower wicks are telling us that price is probably bound to do like that. So no shorts allowed. Longs could be possible. Right now they are not, but potentially shorts, longs, sorry. And on the euro dollar, we have a similar scenario, but upside down. We have the monthly area of supply is in control, too high in the range. As you can see, the latest impulse on the weekly has not been able to consolidate away. Price could do exactly like this. Potentially, there's a potential area of supply over there. The 4 hours is already in a downtrend. No longs allowed right now, potential shorts against the trend. Remember, on the Aussie dollar, we have the monthly in an uptrend, the weekly is in an uptrend as well. So only longs are allowed. We had new areas of demand here, price did not retrace. We have a brand new area of demand on the weekly. We need another ERC. It just came bumped into this 3 months area of supply, and we could have a bigger retracement. Look at the 6 months, pink candle, bullish engulfing pattern, so longs on the way up. This is not scoring high yet, so we need confirmation for longs. Even if we wanted to, we only have one ERC candle over there. We need 2 ERC candles. So right now, long bias, but not possible right now. On the Aussie CAD, we have the monthly in an uptrend, the weekly in an uptrend. And look at price action here. It's overextended. This is very, very bad price action. So price could do exactly like that and drop to the weekly area of demand. No longs allowed right now. The 4 hours are out of alignment. There's no daily demand there. Even if there was, quality is very poor. The score is very low. This is nothing. The origin of the move was there. That's where it high probability to go long. And here on the weekly. On the Aussie Yen, same thing, monthly is in an uptrend, weekly in an uptrend, weekly demand in control, new area of demand on the daily. Long bias, aggressively into tested weak area of supply on the monthly. On the Aussie Kiwi, we are expecting that weekly area of supply to be eliminated. Why? Because we have the monthly area of demand in control. We have also an engulfing pattern. It's a pity that price did not retrace to this one, but it did retrace to this 4-hour area of demand. An aggressive type of trade, expecting that area of supply on the weekly to be eliminated with the support of the monthly area of demand being in control. On the CAD Yen, trying to approach that weak area of supply on the monthly, expecting price to rally higher and even eliminate it. Weekly is creating new areas of demand being respected. Longs, new area of demand created here after eliminating that area of supply. Long bias, no shorts are allowed. On the Euro Aussie, the Aussie is very strong on the board. I mean, across the board. On most Aussie cross pairs are bullish, with the Aussie very strong. We have a monthly downtrend after eliminating that area of demand. We have a weekly in a downtrend, new area of supply responsible for eliminating this weak used up area of demand. Aggressive longs are possible. Monthly downtrend, short bias, no retracement to neither of these 2 areas of supply. The Euro CAD, I need to update the trend line here. Another peak. So supply is in control on the monthly, on the 3 months as well. On the weekly, this one does not score high. only one ERC and the basic structure not that great. So since the weekly area of demand, it doesn't score high, we need confirmation. We cannot set and forget here. Why? Because this area of demand is nested within a bigger time frame imbalance that has not or does not score high. And that's one of the core rules in this one. Potential area of supply here, if this one is eliminated, there's room for price to keep on dropping on the way down to the origin of the move. On the euro pound, we have the monthly with, price action is really poor, but we can see we have pink candles over there, another one over there, another one over there. Price could continue to drop all the way down. The daily is a real mess. The weekly sequence, we have the weekly area of demand in control and a brand new area of demand here. Is an aggressive type of trade, but we have the support on the weekly and the daily imbalances being in control. On the euro yen, month is in an uptrend, weekly in an uptrend. Trading within here is a little bit aggressive. We have the engulfing patterns, which is good. Ideally, that one is great. Pity that price did not retrace down there. We have brand new area of demand over there. Another one being created over there. 4 longs and a strong area of demand on 4 hour. The euro NOK, the NOK is getting very strong across the board with the crude oil getting as well very strong. And that is probably, I say probably because, correlation is, very difficult to, it doesn't always work. But since the Norwegian krone, the country, Norway, is an oil producer, if with the crude oil, let me do the analysis for Brent, because it is related to the NOK here. So we have weekly in an uptrend, new areas of demand being created and respected, and room to reach the monthly area of supply, expecting that weekly area of supply to be eliminated with this attack. Look at the pink candle, the 6 months and the 12 months areas of demand are in control. So short require confirmation. So the Brent and the crude oil are getting strong, and that is probably helping the Norwegian krone, making the euro NOK dropping, because the NOK on the right side of the currency tell us that this is happening. So we have new areas of supply being created also on the daily, aggressively into tested monthly area of demand. We need very strong areas of demand on the daily in order to go long, and that requires that area of supply, the elimination of that area of supply. The 6 months is telling us, hey, I want to drop on there, okay? And also on the 3 months, probably eliminating that area of demand on the monthly, but we don't know. On the euro kiwi, monthly area of demand is in control, longs and new areas of demand on the daily, but nothing like that is happening. We actually have new areas of supply being created on the daily. So this area of demand could be eliminated. Longs requires new areas of demand, and there's nothing like that yet. Pound dollar, monthly is in an uptrend, weekly an uptrend, daily, weekly area of demand in control, daily area of demand in control, but there's nothing to go long at here. So we require new areas of demand in order to go long. Pound Aussie, the Aussie is very strong, so expecting price to drop further. And that is happening, creating new areas of supply on the daily and the weekly, so short bias with the monthly in a downtrend. Pound CAD. Tricky scenario on the monthly with monthly area supply and control, and this weekly range, okay, classic resistance, classic support, and just doing this over and over. So not traded this one. This one would have been great here, trying to pull back same way it did on the pound dollar and many other pound cross pairs, but it didn't on this one, and it is too late now because we have the daily area of alignment with the daily area of supply created. Pound yen, the monthly supply area is under attack, expecting price to rally higher, and the elimination of that area of supply. Longs and areas of demand, it's a pity the price did not retrace to that one, which is very strong. Similar imbalances have been created on many other yen cross pairs. Some of them pulled back to similar impulses and imbalances, but it did not happen on this one. longs and near areas of demand, aggressively expecting that tested area of supply to be eliminated. On the pound Kiwi, we have the monthly area of demand in control, very similar scenario to the Euro Kiwi, with the monthly area of demand being also in control. Longs and near areas of demand, we have near areas of supply being created, so no longs are allowed. Long-term shorts with 6 months area of supply in control. If this area of supply demand is eliminated, that's even better. This is not supply on the daily. It needs to accomplish something. So we had here drop base rally. So that was the previous trend line. Or are you going to move at the bottom? So this is what we have right now. Kiwi dollar, we have the dollar index at demand, so probably this is helping the Kiwi dollar to drop, and also potentially on the Aussie dollar, if that monthly average demand on the dollar index starts to rally higher and play out. So on the Kiwi dollar, this bullish impulse on the weekly did not consolidate away. We need to wait for confirmation. So right now, this is the better options for longs, and this one as well. Kiwi CAD, monthly area of supply is under attack, not broken yet. Latest weekly impulse was not strong enough to consolidate away. We should not trade within here. Ideally, it would have been great. Price retraced to this weekly average demand or to that weekly average demand, but it did not. It did not retrace to these imbalances on the daily. It did retrace to this 4-hour area of demand on here on the 4-hour, but look where it is. We don't want, rules do not allow us to trade inside this bullish impulse that did not consolidate away. And before the engulfing pattern happened, price was already at the 4-hour area of demand, so we didn't have any confluence at all at the time when price reached that 4-hour area of demand right there. So potentially we're going to have a 4-hour downtrend if this area of demand here is eliminated, creating an area of supply here. So the 4 hours already out of alignment. Daily price action is very poor, so we need price to drop further, or right there. Kiwi yen, monthly and uptrend demand created, demand on the weekly as well, demand on the daily playing out, longs and nears demand. Dollar CAD, monthly is in a downtrend, weekly in a downtrend, no retracement to these areas of supply. It did retrace to this 4-hour area of supply, so no longs allowed right now, only shorts are allowed. In order to go long, we need a weekly out of alignment, and that's far from happening. We need that out of the way, and we also need, what's going on here? One sec. We need this out of the way and also the daily supply out of the way in order to think of going long. Tested area demand on the 3 months, expecting price to drop further. The 6 months is telling us, hey, do not go long. Price could drop all the way down. Dollar yen, we still have the monthly area of demand in control. Okay, so only longs are allowed. This one here tried to play out, and it did not play out. Very strong area of demand, tested several times and then eliminated. Now the daily out of alignment, we have the bullish engulfing pattern, but we also have a bullish engulfing pattern over there, and that one didn't play out. So if you take this area of demand, make sure that you manage it very aggressively. Ideally, we want the weekly out of alignment for longs. But like I said, monthly, the daily area demand is fine to go long at. This one only has only 1 ERC. This one also had 1 ERC, but very, very wide. Wider than most of the ERC candles. That is close, but that was huge. Okay, this one. Swiss franc versus the dollar, very strong impulses. We need a bigger retracement for shorts. Not just this daily area of supply. It's aggressive. We have the engulfing pattern, and then it went over, made a lower low, so price could rally much higher. and this is a very tricky scenario. Chinese yuan trying to reach monthly average demand where longs will be possible again. After such a strong sell-off, longs is great, moreover when we get a very strong area of demand. So this is a long-term longs that starts to rally, and the weekly is very poor. So if these highs are broken, probably price was going to rally all the way up to the top, the same way it did drop all the way down, almost all the way down to the bottom. Indian rupee versus the dollar, longs a monthly area of demand. Now we have the weekly area of demand in control, so no shorts are allowed here. Potential longs with the weekly area of demand and the 20-MA confluence over there. Norwegian crown versus the dollar, the NOK is very strong, so monthly is in a downtrend after eliminating these two areas of demand. Weekly in a downtrend, daily supply in control. Shorts are near the supply. Singapore dollar versus the dollar. Monthly area of demand is in control. This is a very similar scenario to the dollar index, with the monthly area of demand being in control. So I'm going to copy this comment and paste it right there. Longs, we already have a very strong area of demand on the 4-hour. Ideally, well, we want at least daily area of demand, so for higher probability. South African rand versus the dollar, longs are near the demand because the month is in an uptrend, demand is in control. We've got a brand new area of demand over there. S&P, all the indexes rallying higher and creating new areas of demand. So longs are near the demand, a weekly uptrend, everything in an uptrend. Nasdaq, same thing, rallying higher, creating a new area of demand over there. Again, after having that area of demand playing out. On the Dow Jones, we've got that area of demand that was called a couple of weeks ago, playing out as well, brand new area of demand on the daily. And there's also one here on the 4-hour. Russell, new area of demand, overextended on the weekly, was overextended now. Price might start dropping, but it might not, because as you can see, Nasdaq, we were waiting for, after this strong rally, we were waiting for the correction. It did not happen, so this could easily happen as well on the Russell. Long bias, this one is an aggressive type of trade. DAX, as expected, the monthly area supply here was eliminated. Month is in an uptrend, weekly in an uptrend, near the demand. This one played out nicely. No retracement of this one over there, brand new one over here. FTSE, new average demand on the daily, room to reach that monthly average supply, long bias. Nikkei, new average demand, no retracement. Those are the areas where we should be thinking of going long. The Australian index, ASX 200, engulfing pattern, no retracement here. So expecting that area of supply to be eliminated. If I had to choose between these indexes that I already analyzed, I wouldn't choose this one because it has the monthly average supply. I would choose others like the FTSE, still room to go, and also the American indexes, okay, that are have already broken the all-time highs. So I would be more inclined to go long on the others and not on this one. Hang Seng Index, new average demand created here, in control on the weekly, also on the 6 months, expecting that monthly average supply to be eliminated. It's a pity the price did not retrace to any of these areas of demand. So unless you are long from here on the weekly, on the 6 months, on the daily at least, well, this one, that's the one that played out on the weekly as well. Nifty broke all-time highs as called in previous analysis 3-4 weeks ago. Weekly area demand to control, near average demand here in the daily. Longs, look at that strength, at that strong area of demand on the monthly. All this happening with the support of the Nifty demand area on the 6 months chart. Bank Nifty, expecting that area of supply to be eliminated. Longs and near average demand. 10-year notes, counter trend shorts, expecting price to drop all the way down to the monthly and 3 months area of demand. All these counter trend areas of supply, this played out, this one could have played out, but it did not retrace. There's a new one which is even stronger than the previous ones. Short bias, counter trend, remember. Gold, we have price could drop much farther with the weekly area of supply being in control after eliminating that weekly area of demand. Weekly and downtrend expecting bigger retracement. No longs are allowed here. We need confirmation for longs. Look at the strength of this bearish candle on the weekly, with the weekly areas of supply in control. Natural gas, we were looking to go long down there on the daily and the weekly, but price did not retrace, which is a pity. It did retrace the previous one and played out nicely, but the nested area of demand called in previous analysis a few months ago. Long bias. Bitcoin, crazy. So this is very strong rally. Bitcoin is probably going to collapse anytime soon. It has doubled the prior highs, all-time highs, which was at about $20,000, and now it's more than, well, it reached, what price is it? Like $42,000. Crazy. Oh my God. So at the end of June, we might have a 6 months area of demand. We will have a new area of demand on the 3 months at the end of March 2021. We already have the monthly area of demand. So going long here is like crazy. Super expensive and overextended. And Brent, we already did the analysis for Brent. Bullish bias on the way down, on the way up to the monthly area of supply. And that's everything for this analysis. Enjoy the rest of the day and stay safe. Be happy. Bye-bye.